What's up, friends? It's your boy GP with DeOrganized Media, bringing you the first inaugural episode of Darth Charts, where we have our good friend Darth Dude coming in to teach us a little bit about TA and, give us the ups and downs on how to navigate the market. Very excited for this inaugural episode and look forward to vibing with you guys, keeping the frequency high. We're going to be doing this on Tuesdays at 1 p.m. ET every single week. So we'll get a little insight from Darth and seeing what he sees in the charts. But without further ado, I got my good friend coming on, Darth Dude in the house. Welcome, Darth Dude. How are we feeling today, bro?
Good morning, guys. Man, shout out to Crypto Dude for that killer intro. I'm
Right?
hyped to be here, man.
Yeah, dude. He can cook. That's one thing about Crypto Dude is he's able to. He's very versatile. He's a versatile builder. He can cook in many different fashions. Lately, he's been building game assets and how to transact with stacks from X and Discord, and even cooked up an anthem for Darth Dude for Darth Charts. So let's go, man. Big shout out to Crypto Dude. You can give him a follow at CryptoDude_BTC on X. Where can I follow you, Darth?
Darth Dude 73 on X, So we're live, and sometimes I'll post charts, but mostly BNS names. So
BNS and shitpost for the win. Let's go. We all love a good quirky TA that has conviction. Let's go.
yeah, let's
So
go. Let's break these charts down, huh?
damn Skippy. So we got a couple, big ups to Biggie in the house and Target One. Here we go. So bringing up the charts here for you, Darth. What are you seeing and what are we looking at?
So just looking at the macro on Bitcoin, got the weekly time frame up in here, and as you can see, it has been up only for a number of years now. So that's always nice, but so let's zoom in here. So I remember telling you just a couple weeks ago, we were looking on this Monday in August at this little high right here and this high. And I was like, man, you see that double top? I bet you we're going to induce a bunch of shorts and then it's going to absolutely wreck them. And then in the next 2 days, it baited shorts. They put all their stop losses up here. Boom, wrecked. And now who do you think's next? I'm willing to bet the bulls are next on the chopping block. So
You think so? So we're feeling like maybe a bull flag somewhere being stopped out or lows being taken. What are we thinking? What's on the agenda for bulls and bears?
So the bears just lost. So they got stopped out. Now, I mean, literally everyone who's bought Bitcoin in the past 2 years is in profits. So if you're looking to just use 2 brain cells to trade, buy low, sell high, we're at the highs. So, that's what we're looking at. This is the next intermediate term low that is on the chopping block, and we can break this low and still be bullish. So my eyes go straight to here. I'm looking at this inefficiency in the market on the daily time frame. And you see how when we ripped here in July, we gapped up, we made a wick, and there's no overlap in this candle. So there's an inefficiency. It offered sell side, but it didn't offer any buy side. No one was able to buy the dip in this range from 110 to 109,000. So it would be fair to look for the price to come down here and offer some buying opportunities in this range. And if
that's crazy, dude, because I was just in the Stacking DAO weekly screen share talking about how Darth Dude is going to talk about 110K. How did I know?
It's crazy. Yeah, and I mean we've got this structure. So I'm going to delete these shorts that were stopped out, and let's just pull a fib here from the low to the high in this range. Let's throw a 786 on there. And oh, look at this juicy 786 at 103, 104K. So
So, what is the 786? Can we take it back to basics? So, assume that the users do not know about Fibonacci's, right? So, we had a TA for a little bit. Big shout out to Landy. He's actually working with the Goxstein network now. So, big ups to Landy for teaching us his style of TA. But now we are getting into different confluences, different tools, different everything, even the colors of the chart. So, can we maybe take it back to basics? Can we tell them a little bit about Fibonacci's?
this is your basic ruler. It's just a measuring stick for a given range. So I changed it so we've got the zero point 0.5 level on here, and the zero point 0.5 is just fair value for a range. It's just the 50% of this top to this bottom, or whatever range I decide to pull. I'm pulling this because this is a prominent swing low, and then we've got a prominent swing high. When I say we're looking at swing highs and swing lows, that's just a 3 candle pattern where you've got one candle making a low, and then on either side of the candle they're higher lows. So this is a low bookended by higher lows on either side that makes this pattern a swing low. So I'm pulling from a swing low here to a swing high where we've got a high and then lower highs on either side of it. So I'm pulling that from the range. We've got fair value in the middle of our little ruler here.
And that's the
And
point 0.5 Fibonacci, right?
yep, that's the zero point 0.5 fib. And the 786 is just a 78% retracement for the given range. So when the first place my eyes go to in this range is right here. Now, why right there? I see a nice little kind of a bull flag. Also, check this out. I'm going to take my magnet tool off here. Now we're going to draw a little cup and handle. You see that?
It's a little laggy, so it takes a second for it to catch up whenever you draw some patterns. But yes, I do see that small cup and handle now that you're talking about. Like if you were to go to the say smaller time frames like the 4 hour or something, obviously you might see a little bit more curvature there. But for the most part, I can use my imagination and say that that's a cup and handle. Right?
Exactly.
So yes,
So people who bought this cup and handle, or they bought the bull flag, or something like that, they were probably targeting the highs, and they probably have their stops below bull flag. So those stop losses for the bulls that are in profits but have yet to pay themselves, let's say they were going off a narrative of aiming for 150K or something,
right.
and if they haven't paid themselves or secured their position, there are stop losses down here. And I'm looking for confluence, and basically that just lines up with this little 706 and the 786, which is the discount of our range. And if I wanted to buy the dip or buy the discount, that's what I would be looking for. I would be looking for this discount range, which lines up with near term bull flag stop losses with our protected low if we wanted to maintain an uptrend. So near term, here would be my discount 103 to 105K with 110 being low hanging fruit objectives
Right.
for a buy the dip scenario.
Got
And
you. So come down, stop out, bull flag or cup and handle, induce some shorts maybe. And smart traders like long and or pack their bags in this area. So 110K, multiple confluences, lines up with the Fibonacci tool, like pulling from lows to highs. Has what other confluences do you see in this area, and what are confluences?
that's just when you've got multiple things lining up, um, just multiple ideas lining up in the same direction. So another thing I'm looking at here is pattern traders who are going to be buying the dip. See this nice little head and shoulders?
Right. So yeah. So pattern traders often
Yes.
looking at the charts and seeing the future, right? They say, "Hey, I see this pattern. I'm gonna run with it." Now I do see the pattern that you draw on. I do see a little
Yeah.
head and shoulder, right? And burst head and shoulder.
Yeah. So there's your bullish pattern, and also notice what happened here before we pumped. We had a nice bull flag forming, and what happened before the bull flag played out? Anyone with their stop below here who was correct and onside got stopped out,
With the
and then
wick.
it went their direction, right? That measured move for this bull flag would have been right here.
Okay, so how do you get a measured move if you are a pattern trader, right? And that is one of your confluences that you use, like you use patterns in the charts. How do you make a bull flag? How do you pull? How do you get the flagpole? All of that. Like, how would you go about that?
So all I'm doing is drawing from this low to this high. This is the pole of the flag, and then you can kind of see your pattern drawn out in your bull flag. And then I'm going to take the length of this pattern, put it where we flip and break out and retest. This would be your breakout and your retest, and then this would be your target. And now notice how that target also lines up with another macro fib extension that I've got on the charts here from a different place. We'll zoom out and we'll check that out in a minute. But notice how this measured move just about hit, 80% of the move. So that pattern played out. Now we're looking for the next dip, and it's all-time highs by the dip season. So if you were to do like a weekly or a monthly trade, um, that's where this 786 would come into play, and it'd be stopping out the people who were most recently right and who may or may not have paid themselves. So that's kind of what I'm looking for in the near term of Bitcoin. Now I'm going to go down here to Bitcoin dominance as well.
Right. So, what is Bitcoin dominance?
That's just your percent of the market cap.
So,
So
how much mind share Bitcoin has? What is it like? The market cap? What is the
just
market
by
cap?
dollar value. Yeah, dollar value of how much funds are in Bitcoin versus the rest of the cryptocurrency market cap. And
I
we
see.
did
I
an,
see.
so we're on the weekly chart. We made a high up here at 66% Bitcoin dominance. And what I'm seeing here are a couple things. See how this is a swing low here? We got a low and then two higher lows on either side. It's a
So what
prominent
is
swing low.
so a swing low is like indicated by a candle with a wick to the downside. Is that what you're calling a swing low? What are you calling a swing low?
Yeah, this would be a swing low right here. We got a swing low here. We've got a swing low here. We've got a swing low here. So
And
the
it's
way
taking us just a second for your visuals that you're drawing on the chart to sync up. So yes, I see what you're saying. So from there, you've got a wick to the downside. From there, you have a wick to the downside with the corresponding candle to the upside. What Lifer would call is like a tweezer bottoms or tweezer tops.
right, yeah, something like that. So what I'm looking at here is a short-term market structure shift on the weekly time frame for Bitcoin dominance. So what is that? A market structure shift is when you've got a high that breaks a swing low, retraces, and then makes a lower low. So that would be our market structure shift, which indicates at least near term lower
Also,
prices, or in this case,
also
lower Bitcoin dominance.
when you're drawing those patterns, they only flashed on the screen for just a moment. So like maybe draw the pattern, leave it there for just a sec, let it catch up, and then there you go. So we can show the people at home what we're talking. Perfect execution there. So yes, so from that swing low, that big candle to the downside on dominant broke the structure, right? And then now we're looking for another big candle down on market or Bitcoin dominance, is what you're saying, or
Yep.
target further swing lows.
Exactly. So the reason I've drawn that line down here is because if anyone is making their Bitcoin trades based off of Bitcoin dominance and they're playing retail patterns, this is going to be looked like as a double bottom or equal lows. And if you know anything about the markets, is that retail patterns get wrecked very often.
Yeah, yeah,
Very often.
80% of the time, yeah. But, sometimes you might just get, like, a breakout and, like, you're successful winner 20% of the time before you get stopped out.
Exactly. Yeah. So I'm looking at this to target this double bottom on Bitcoin dominance for multiple reasons. One, we're in a premium. Bitcoin dominance has been going up for quite a while, right? Since August, September of 2022. We've been going up. So now I'm looking for a, a bit of a retracement on Bitcoin dominance. And that is a good thing because it means that profits from literally everyone who's been in profits in Bitcoin is going to be taking those profits and putting them elsewhere. And this would be a key indicator I'd be looking for to hint at alt season being imminent. And we would want to see Bitcoin dominance start to fall as the relative percentage of dominance by market cap flows into altcoins.
Now, what is like the first altcoin? Like, so say I don't know anything about market cycles and how liquidity flows from one thing to another. What is like the first thing that I want to look at after Bitcoin dominance? What is the signal? What pumps first for alt season?
Let's do this. Can you guys read that? It's kind of blurry, but
It is. It is. So first phase one, Bitcoin takes off, right? Makes its move. Second, money flows from into to Ethereum for phase two. Phase three is large caps like Solana, XRP, other stuff like that,
BNB. Mm-hmm.
BNB. And then phase four is alt season, where those are like the mid range. Would you call them mid range to lower range tokens get some love, right? What tokens would you consider in that category?
In large caps or
In alt season. So like,
season
what
is
market cap would
also
you consider?
euphoria.
Euphoria. Okay.
So large caps would be top 20, top 30,
Okay.
which
There
we're
you
which we're seeing with Solana, we're seeing with Tron, we're seeing with BNB. All the big guys are at all time highs, and we can look at that. But this is the path that we see cyclically happen every year. Is Bitcoin goes first, it's the market leader. Then Ethereum is the altcoin mothership. Ethereum follows, which Ethereum is at or near all-time highs at this moment. Once Ethereum breaks all-time highs, we'll get more euphoria, more things will flow into large caps, and then once everything's blasting and all the big players are in the money, they're going to start ripping, like altcoins are just going to rip the faces off the bears.
So all the naysayers, all the people saying NGMI on the timeline, if you're in alt, and all the fudders, all the people that are like, should have bought Bitcoin, all of those guys, right?
Exactly. All the guys who are saying, "Oh, Bitcoin should be 80% of your bag right now," that's you don't buy tops. That's all I'm saying. Don't buy tops. I'm not saying this is the Bitcoin top. I've still got higher targets for Bitcoin. If we can, let's go here and delete some of this noise. Okay, we'll delete this lower time frame fib, and I've got a fib pulled over here
All right,
from
so back on the
January.
Bitcoin chart, now seeing the Bitcoin chart just now. Okay, so
There we
now
go.
we've kind of rearranged, kind of showed some fibs from what levels are we at there on your chart? Around what price range is that big wick to the bottom?
This is 38,000 in January of 2024.
Okay.
to 73,000 basically are when we broke the last cycle top in March of 2024. So Q1 of the last year.
Gotcha. Gotcha.
So I've got this fib, this range pulled, and then I've put extensions on it um, to just have some targets to look for in all-time high season. And as you can see, the first target is the zero point 0.5 extension, and all that is extending half of this range above the market. And we
So
can,
is that a negative fib, or like how do you?
it's like the negative 0.5. It's just extending half of this measurement above the market.
Gotcha. Gotcha.
Yeah, so
So
it just, yeah, it looks like this. I'm taking this, here's your range, and then we're extending it. And that's how you get all-time high targets when there's no like highs above to aim for if you're looking to stop out shorts.
right, whenever you're looking in like price discovery and stuff, that's what you use. You use fib extensions for confluence and like trying to find for price targets and stuff like that, areas of interest.
Exactly. So
Okay.
you can see that this -1 extension at 108, 109,000, it was respected very, very precisely up here in January of this year. And that just gives more confluence, more confidence to use this fib range as a reference.
And I just wanted to, take a quick little moment to give a brief shout out from our sponsor. It is called NFA and DYOR, which stands for Not Financial Advice and Do Your Own Research. Right, this is for educational purposes and entertainment purposes only. So this is not financial advice, and but yes, we are looking into the charts and we are learning TA with Darth Dude. So carry on, Darth Dude. Keep being based, good sir.
Exactly. Yeah. So we had some confidence, and so our targets were hit from this range, our -1 targets. That's where you would want to pay yourself. And in hindsight, that's obvious, right? Because the next long-term dip, like 3-month, 4-month dip, happened after that. Then you have another buying opportunity as we retraced into a discount inefficiency on the weekly time frame. That's what I've got, this little gap here. So when we're doing this and we're making higher highs and we get weekly candle closes without wicks overlapping each other, that's when we get these gaps, these inefficiencies in the market. So from 73K to 80K, there was no dip, there was no buy the dip opportunity. It was just up only. And so I've got this gap marked out. You can see that there's two of them right here. So check this out. Now, why don't I have this one measured? I only have the bottom one. The logic there is only premium. I'm only playing premium and discount price arrays. So I've only got the discount price array highlighted here. And then look at that respect on the midpoint right here.
Gotcha. So would that be considered? So you're pulling that box on the first candle. So you're not extending that box on the second candle on the weekly time frame. Is that like a breakaway candle, or like what?
So you just think about it like this. When you buy, you want to buy the dip, you want to buy a discount. And when you've got two back-to-back gaps like this one is more of a premium, it's higher prices, and this one's more of a discount. So if you want to buy a discount, this is your area of interest. Right? Kind of like, now we'll check out these gaps. See that? So,
As long as you're leaving it on the chart for a minute, I will see it.
there we go. I got it drawn out.
Yeah. Okay. So yes, I see every area of interest that was respected on the way up.
Exactly. So now what we're looking at here, you mentioned a breakaway gap. So
Yeah.
this gap right here with the 1 week annotation, this never got traded into before we broke the previous high.
Right.
right? So this is a breakaway gap. This is extremely bullish. When we have two gaps and only the premium one gets traded to before we make new highs, that's very, very bullish. So
So what you're saying is
it's
there's a
just in the
chance.
market.
There's a chance we're gonna get a little buy the dip opportunity and then new highs.
Yeah, there's a chance. Yeah,
There's a chance.
we've got
Okay.
multiple levels of confluence with this gap that we drew on the daily, and we zoomed out to the weekly. So check this out. This new high that we made, watch how randomly this lines up. Look at that. See that?
Oh yeah,
The
that's
other
super.
blue line?
That's super random. So
Super,
random. You're so right.
super random. Definitely not algorithmic at all.
No, not at all.
So we'll be looking for an area of confluence right around this -1 level because it lines up with our point of interest, our discount on the daily that we drew out. It lines
Okay.
up with the top of this down close candle on the weekly and our negative fib level. So 108, definitely a good point of interest. That doesn't mean we can't go down here to 105. That would also be an acceptable range to bounce off of.
So 105. So in between 110 and 105 is the range to be packing bags in your theory.
If you wanted to continue playing Bitcoin and buy the dip.
Right. Buy the dip opportunities for hodlers, for people that are stacking sats.
Exactly.
Gotcha.
That's what we'd want to look for. And then I've got extensions up here at 126 and 144K as our next opportunities to pay yourself and fire your boss.
Oh yeah, firing the boss season. Where at? You said
At these fib extensions up here, 126 and 144.
126. So almost there. Almost hit that fib extension, but did not quite hit it. I think our highs are on 124.5k. Am I correct?
Yes. Right
Okay.
here.
So we haven't quite hit that fib extension yet. You're still looking for it to hit, and then the next one. Where's the next fib extension at? And which fib extension is that?
That's the -2. So that's 2 standard deviations from
And what?
Q1 of 2024.
Okay, so from Q1 2024, we pulled fibs from there to where?
That's just March, from January to March right here.
Okay, January to March, and then fib extensions. Okay, gotcha. And then what is a standard deviation?
That's just this measurement times 2. That's one
Beautiful.
of these measurements. That's your -1, and that's your -2.
Awesome. So it's just times 2. It's like that much of a gap times 2. Boom.
Exactly.
Okay, got you. That's a deviation. 1 deviation, 2 standard deviations.
Yep. So it's definitely possible. You know, we do something like this, and we chop around, and we chop around and accumulate into Q4. And this would actually be really beneficial for people to start accumulating altcoins. If we see Bitcoin go sideways and all the big players taking profits at these levels, those profits are likely going to flow into Ethereum and into altcoins.
And do the chart thing, right? From rotate from Ethereum into large caps, mid caps, small caps, just like a full like an alt season, a traditional alt season, a 4-year market cycle, right? Like a traditional, but just like enhanced with institutional adoption, and then retail gets back into the mix, and then we have hyper Bitcoinization, and then we have $1 trillion Bitcoin, right?
Exactly.
Okay, all right. I thought I got it. I thought I understood that. Okay, perfect. $1 trillion Bitcoin on the way. So I guess the next thing is to ask you, right? Is why are your charts so bland of color, right? Like, is there something? Is there a point to be made about like the white and the black, and
That's a
why you have that?
That is a fantastic question. And that's because everything in the Matrix is a psyop down to traffic lights. Every single person since you've been 16 and you learned how to drive has been subconsciously programmed to stop on red and go on green. So when you see all these flashing red and green colors, that that's what comes up in your mind. Your subconscious remembers, oh crap, it's red, we need to stop. We don't want to buy this. And oh, green, we want to buy green. If you want to win in the markets, you want to buy red candles, buy low, sell high, which is the exact opposite of that programming that we have. Right?
That's fantastic. That's
Red is
fantastic.
fear and
Yeah.
green is growth. Green is grass. Green is health, right?
I
That's
just
that's
thought
exactly why.
I thought you were just like, colorblind and it helped you see better or something like along those lines. GP, he's like all the way out there in the sky half the time, right? So like, I'm glad that you broke that down. Thanks for answering that question for me. I guess the next question is, since we've kind of covered like the how liquidity flows from Bitcoin into Ethereum into other alts and stuff like that. We covered fib extensions, we've covered breakaway gaps, down close candles, all of that. Is there any other indicators that you may use for confluence that you have not used yet?
Time and price.
Time and price. Okay, so can
This
you break that
axis,
down a bit?
time, and this axis, price, is every single thing you need to trade. Everything else is just lipstick and noise, and it makes it harder to see the end goal, which is price and the time that you want to get in.
Okay, so often we talk about this, how you may just trade NQ on one day where you see a play, or you may just sit out. Can we talk a little bit about how you decide to stay on the sidelines and when to get in and trade?
That's a big rabbit hole if we go into NQ. Um,
Okay,
we
fair.
can do Ethereum if you want.
Yes, if we could do Ethereum, that would be more palpable for our audience, honestly.
Okay, let's do Ethereum. So check this out. I'm gonna go all the way over here.
And make sure you're drawing it slow too. Like, yeah, draw
Yes.
it like in 0.5.
Oh, boss.
That's just me because like my eyes they see slow, so you can blame it on me.
Okay. Let's. Can you see that?
All right, so yeah, so from what I am seeing on Ethereum is I see that you've drawn a line at the bottom there, a double bottom, so to speak, and then another. Are these fib extensions? Is what I'm seeing again?
No fibs, just lines.
Just
So
line. Okay,
I'm just
cool.
basically the logic is that behind every single trade there are two participants. There's a buyer and a seller, and both think they're right. But the reality is there's always one winner and there's always one loser. So the the logic I use to make these trades is identify the losers in the market and then position yourself to take their money. That's the simplest way to explain it. So on the weekly chart, back here in July, when we were at 3,700 for Ethereum, it was very clear that we were making a beeline straight for all the shorts, for all the bears that were saying, "Oh, this season's taking too long. It's over. We're going into a 3-year bear market." All that stuff. I saw this high over here combined with this high and this high. This is textbook double top. This is where all of retail puts their stop losses because the book tells them to. And that's precisely where Ethereum went without mercy. Without
Yes,
mercy. And then it
without
stayed
mercy.
just short up here to induce more shorts And now where do you think it's going?
Um, well, if I were retail, I would think it's going lower because it's like what. Yeah, but right now, I think it's going higher. We haven't seen all time highs, right? Like, so where, what you tell me?
So I'm looking here. We're going to zoom in and
Okay.
we're going to break down what indicated we had a bottom for Ethereum and then two continuation plays. So I'm looking at one, a swing high down here from February. See how that wick? Oh, see how that wick got tagged? That's called a break in market structure. So when you have a prominent swing high, meaning this candle right here has a
Yeah,
higher wick than
there
the
you go.
two candles beside it,
Keep it on there for a sec. Yep, there
and
goes
then you
the
break
candle.
the high,
Now really slowly.
and then you retrace. This is a shift in market structure.
So you're talking
So
about from those tweezer tops to the bottom, and then boom, we made it look like a double top, and then just shot straight up. Is that what you're talking about?
Mhm. So
Okay.
when this wick got broken, that's a higher high in the trend. So that means after this week, we're looking for a discount point of interest to enter. So I'm just measuring the midway point of this gap on the weekly time frame. And you would want to look for a point of interest in the upper half of this gap. This would be your entry to target all the way up here, the shorts.
Okay. So how would you draw that gap that you just did? Where did you draw it from? Uh, so I see it, but for the ones at home, how you drew this midway? How do they find the midpoint, and how do you draw that?
That's just going from the wicks when you have this big giant god candle, and then you have wicks that don't overlap in the previous and the post weekly
Okay.
candle.
Okay, so the candle before and the candle after it, that big white candle to the upside. I see it now. I see it now. So
You see
the
it?
next candle over wicked down, but it didn't wick all the way down to where the candle before that big white candle, it has a wick to the upside. So they don't meet. So there's some type of, what is that? Is that a fair value gap? What is that called?
Yeah, it's called a fair value gap.
Okay, so it
Yep. So
means that price didn't trade in between that area at all. Not at all.
yep.
Just didn't even just boom. Okay. And then we can
Exactly.
retrace to the midpoint, like of that box that you drew. Okay, I
And
see it. I see it now.
if we're bullish, we would want we wouldn't want the midpoint to be traded below, or at least we wouldn't want a candle to close below this. It could have had a wick down to here, and that would have been fine. But if it closed below, then that would have been um, cause for potentially looking for lower prices. But we had this
So
candle dip down, and it closed on a weekly basis. That
on a
gave us
weekly.
a bullish opportunity to buy into this week.
Okay, so I see what you're saying. Like, so the candle body, like the square part of the candle, did not go past and then close below the halfway point of that box. If it was the skinny part of the candle, the wick, right, it can go down past the halfway mark. But as long as the big square part, the big black part right there, doesn't close below the halfway mark, and then we're looking for higher prices, right?
Exactly. So let's
Okay.
break down the anatomy of this weekly candle real fast.
Okay.
So there's four basic parts to a candle. So this little white candle, the bullish candle, it went up, it took these highs, so it stopped off the shorts, and then it went down and it closed. So on Monday of the next week, we have an open. So the candle has an open. So look at these numbers up here. There's four parts to the anatomy of a candle, every candle, regardless of time frame. You have an opening price, a high, a low, and then a close. So those are the 4 points of interest on every single candle. So after we get this close on this weekly candle and we see it's respecting, like closing above our point of interest and telling us we're bullish, you can just buy the open of the next candle that next Monday and then wait because you're expecting this high to get run through. And so that,
So I have a really crazy idea. But go ahead. Go ahead. Let's finish
yeah,
your.
so that would have been the play. A sample trade would have looked like this. We buy the open blindly. We put a stop below this gap. And then we have this super duper obvious double top up here where we know retail puts their stop losses. And that would have been your sample
Okay.
play on the weekly basis for Ethereum based off of a market structure shift, a respect of a fair value gap, and then bang, you buy the open of the weekly candle and you target where retail is going to put their stop losses. And there's your 4-to-1 risk reward. Isn't that
Beautiful.
cool?
Beautiful. So yeah, that's pretty damn cool. So what I want to try to do is maybe like maybe you know how in our Discord screen shares and you're breaking this down for me, like you're able, like I can see all the fluid motion, right? So I don't know if maybe if I tried to share my screen from like a Discord conversation that we're having, like you're screen sharing with me in Discord, and then I share my screen, if we would be able to track your motions while you're drawing the patterns. But we can troubleshoot that later, or we can give that a shot now. That's up to you. Like it's totally up to you.
You saying about lag? You want to?
Yeah, so I could try to share my screen of you sharing your screen to me in Discord. That way it's not so taxing on your machine.
If you want to, or we can just run it live and do it next week.
Yeah, we'll try it next week in the in the next screen share. We'll do a little bit more testing, that way we can figure this out. But this is great information, and maybe even like doing a short demo of like all of these, how you drew the fair value gaps, how we tested the midpoints of the fair value gaps for bullish confluence, and all of that. We do like a recap next week as well of all of what we covered in episode one, as well. That way we have a basis of knowledge that we build on, and continue to add to that tool set, right? Because I'm really loving this. I love the educational portion of it, teaching people how to read the charts and how to navigate the markets without being put in a blender. I don't like seeing my friends lose. I want to see all of us win. So teaching them how to be on sides is important. So I want all of us to pack our bags accordingly. Just wanted to go through some of the support that you're getting in this chat here. Biggie says, love this. Target says he's here. Crypto dude in the house, saying, let's go. Um, Peace, love music saying, chop, chop, chop until Q4. Waiting on them rate cuts, baby. Would line right up, right?
Doubles.
Uh, Doubles. DeFi Dictator, what's up, DD? Going the Dark Lord. That is very, very true. Big shout out to everybody watching right now. But yeah, Darth, what else we got on the agenda?
So
What's
if I
next?
were to look at Ethereum, I would look at the super duper obvious double top, and that would be my target. And if I wanted to play um, a long on Ethereum, I would be looking at this gap on the weekly time frame, and then I would zoom in on the daily, and I would try to find a point of interest on this daily range.
So we just shifted from the weekly chart to the daily chart down a time frame. Just do it, just like doing like letting you know, just trying to your visual cues, letting you know where it's at on screen.
So I've got my weekly point of interest. Now we're in the daily. So what do we have here? We've got 1, 2, 3 fair value gaps on the daily. If I want a discount of the range, let's go here. We're going to hunt the shorts. So we've got our midway point, our fair value. So really, I want anything below fair value in this range. And I would be looking for a play in here, maybe inside this gap on the daily time frame. I'll let you guys catch up.
Beautiful. So what I'm seeing here is I have some fibs pulled from the lows to the highs, right? Got the fair value gap clearly defined from wick to wick. We're looking for our play calculator now, right? Our 3-to-1 ratio, trying to target a good place to put a stop loss and where to take profits from. And so we're looking for an entry around, where would you say a good entry for ETH would be if we were to look for a long on the daily time frame? You're saying it's around
3,007.
is that about
You
30?
might get lucky.
You might just get lucky if you place a limit order around $3,791 for ETH. Make sure that you're placing your stop loss if you want a 3-to-1 ratio at 3,300. Is that 33.96, 33.56?
50. That's 56.
56, 33.56 for a stop loss and a take profit around $5,000 and $5,114 for
I just
ETH.
extended that
Wow.
for a 3-to-1. But this red line is your stop loss. That's your previous all-time high.
Beautiful. So if you're targeting all-time highs, right, for play, you're looking for around a $3,700 ETH to entry.
Mm-hmm. Now this could be like the first week of September could be a reasonable place to look for this play, right? We could chop down. It could be earlier, could be later, but we could chop down here. Tag the 786, break the highs, make a new low, and start targeting above. And this could happen around the first week of September. Now, why do I say that? If we want a bullish month, we want the first week of the month to go down. That way it makes the wick of the monthly candle. And if we want to buy the bottom of the month, we would want to see September open and go down first, and then look for an entry on a smaller time frame, and then hold with our targets in mind for the remainder of the month or 2 months, however long it takes.
Now, how often do you see in a bullish month that in the first week we move down first? Like how often have you seen that? Like, so like instead, maybe a little fake out, like it's gonna pump first in the first week, and maybe the second week it makes the wick. How often in the first week does it make the wick?
Well, so let's check this out. All right, my cursor is on May 1st, 2025.
Okay.
You guys see that?
All the way over yonder on the left side of the screen.
So what happened in the very first week of May? We went down. There you go. There's the first week. There's the 6th. Here's the bottom of the wick, like right there. That wick on May 6th.
Boom, and then up in the second week
of the month. And then it runs all the way
That's
up here.
great.
You get a high in the third week. And then it retraces down and closes the month. So let me draw this out a little easier. Where is our, there's right, I'm going to make this blue, and I'm going to delete this. I'm going to get a little line. Here's your monthly candle on the daily chart. That's the bullish month of May. Does that make sense?
So you're saying that's the whole monthly candle right
Mm-hmm.
there? That's the whole month right there. Boom.
Right there.
May.
You get an
Bam.
entry,
That
then you get a
velocity.
high in the third week, and then so it opens, it makes a low, it makes the wick. Then you get the middle 2 weeks of the month, from the 7th to the 21st, is your expansion, and then you look for the last week of the month to retrace and make that wick and then close. It's actually right here. So that's your monthly candle. And so when you asked earlier, how do I break down what times I'm going to trade? The most, the best times to trade on a monthly basis are the middle 2 weeks of the month. That's when you get your expansions.
So you see a little wickage to the downside, a little choppy action for the first 2 weeks, and then second 2 weeks, or what is it, like the middle 2 weeks? Like, so first week, no trade. Second week of the month is where you're looking for an entry, and then you're looking for an exit by the third week of the month, or what are you looking
Yep.
for?
Yeah. That's it.
That's easy. That's real easy. So first week, hands off, let people get shaken out, chopped up, put in the blender. Then you look for your entry, and that's time based trading, right? And then just basically just dissecting the dichotomy of the biology of the monthly candle, right? So just kind of breaking it down there. I love it. I love that you broke it down that way too. That's very
Isn't that
easy. So,
crazy? Look at July. Here's the 1st of July. Right? All right, here's the 30th of June. So the 1st of July, we go down, we make our wick, and then we pump, we consolidate for the first week, we expand in the second week, you make your high in July in the second week, and then you consolidate. Now, what are we doing in this consolidation? Everyone who has read the book on trading is going to draw this bull flag, and they're going to play this bull flag. They're going to put their stops below here. They're going to get wrecked, and then it's going to go their direction.
went their direction after they got wrecked. Look at that. And now we're doing the opposite, looking like a snack, like for low, like a 3700 ETH, or not BTC, not ETH, BTC. No, not, what am I talking about? I can't see the number. 110 and 105.
Mhm.
So we're looking for some stops to get ran, and then new all-time high. When are you saying new all-time high? Some I'm seeing across the timeline people saying new all-time high September, right? Like, is this like a mutual feeling that you share?
We'll see. I'm not going to put a date on it.
No, I gotta put a name on it. Not financial advice. Do your own research. All that good
I
stuff.
do think there's
right?
a high likelihood that we have some happy holidays.
So happy holidays are always nice, right? People are partying on the beach, out at the lake during the summertime. You're saying during the winter months, maybe we might just get some more action. They're talking rate cuts. They're talking 3 rate cuts in a row. They're talking about maybe even a 0.5% rate cut. Like money printer go burr. M2 money supply exploding. Bitcoin going parabolic, hyper Bitcoinization, and all the buzzwords. Do you pay attention to any of
No.
that?
Well, I do
Just the
pay
chart.
attention
The charts
to
are
the
your
economic
language.
calendar. So one thing that's happening this week is the Jackson Hole Symposium, with all the feds are meeting and doing nonsense. So I'm not trading this week because it's highly manipulated. So
Trying to shake
I'm
people
paper
out.
trading this week, and I'm waiting for September to go live funds in the Nasdaq.
Awesome. Awesome stuff. So Fed days, right? Where Fed numbers come out. Do you trade those days?
I do like days that have high impact news drivers. So you can schedule, like you can set it, your stopwatch to find plays around specifically after high impact news drivers. And then you can find that economic schedule on things like forexfactory.com. Um, you can find all their red folders are high impact news, and orange folders and everything like that. That's a whole new ballpark.
Different day, different strokes for different folks. I feel like you know a lot of people are urged not to trade those days, but you look for those days for volatility, is what you're
Hmm.
saying.
So let's well, I can break down a sample trade on the 15-minute chart for Bitcoin. That is a time-based entry, if you guys would like.
We could do that, and we could also like. Do you feel like maybe for our stacks family, uh, take a look at the stacks chart as well? I know that our stacks family is like, yeah,
Yeah, we
please.
can do that. Yeah, let's. Yeah, we'll do that. Let's look at this 15-minute chart Bitcoin trade. Then we'll go
Yeah,
over to stacks. So
beautiful.
you'll notice I've got my time zone down here set to UTC 4. That's New York time. I don't live in New York time, but all my charts are set to it because the charts run off of New York time.
Yeah, NYSE, right? New York Stock
Yeah, so
Exchange, right?
yeah, the stock market,
Until
yeah,
there's a Texas Stock Exchange, right?
it runs off the New York one though. So let's look at what we have here. We've got a low right here. I'm going to color that blue because we buy low, sell high. Now we've got, this is the price leg I'm looking at. So if my bias is short, right, I'm bearish because we just had the stop losses run earlier for the shorts. So I'm looking for an expansion to the downside. You can see these gaps on the 15-minute. There's 4 of them. So I'm going to take, if I want to buy low, sell high, and I'm looking for shorts, I'm looking to sell high. So there's a gap on the 15-minute chart.
Very small one, but it's
Very small,
there.
but it's there.
Yes.
And what time does that happen? 9:30 up.
9:30. That's an hour after open.
Exactly. So, but no, open is 9:30 on the dot,
Oh, open is okay on the
right?
dot. Okay, so on the nose, 9:30 a.m. ET.
Exactly. So everyone trading prior or positioned prior to the open is gonna look at this bull flag, wonky retail pattern. They're gonna be positioned long. Their confirmation bias is gonna get tickled, and then 9:30 goes up into our point of interest. If I were to short here, it would look like this. I would target that midpoint. I would put a stop loss
If it's not respected,
above the swing high of the gap that made this, of the candle that made this gap loss.
I see. I see now. Yes.
And then I would target the lows. There's a 5-to-1 risk reward on the 15-minute chart with a time-based entry. And targets delivered at 10:15 a.m. If I would, so I would want my targets to get hit by 10:30, no later than. So I've got
And why
a
is
one
that?
hour window. At 10:30, it often goes into what I call the lag switch. The lag switch gets turned on.
Lunch break?
No, that's it. That's at noon. Um,
Oh, that's not noon.
right. So
Okay,
that didn't
gotcha.
happen until here, and it still goes lower, but I didn't. You don't need the full move to be profitable. My 5-to-1 is your 3-to-1 you're looking for, and
When you're not profitable is whenever you don't take profits.
so that's my opening range 1 hour time window. This is like the type of
As dumb as that sounded, like that made the most sense, didn't it?
exactly.
You're not profitable if you don't take
That's it,
profits.
right? But yeah, so this is usually what I'm doing in the background during Find to Earn. But yeah, there's your 1 hour window. You got delivery in 45 minutes, targeting the lows, and that's a simple
I think that's beautiful.
Bitcoin trade.
I mean, that's beautiful. I think that's like like, hey, you're using the open, right, of the New York Stock Exchange to kind of dictate, hey, on a very small time frame, I want to make a little, what is that? What type of trading is that called? Is that a scalp? Is that a, like just time based? Like, what is that called when
Just
you
a day
trade like
trade
that?
where you're
Just a day trade.
Just,
Just a day trade. No swing trade, no scalp, no, just a day trade.
yep. And that's it. And then of course you can
Beautiful, dude.
cater it to your psyche. Like maybe you only have like oftentimes I like to be in and out inside of 10 minutes because 10-minute attention span is easier to hold a trade for than an hour. Um,
It is. I could
yep.
imagine.
But
We've been here for an hour right now, but I'm still focused.
look at this. See that cute little double bottom that looks just absolutely way too perfect to be random buying and selling pressure?
Once it catches up, I will. Yes, I do see the double bottom, and then it just blew straight
Yep.
through it. Yeah.
That's bait. That's retail bait right there. Algorithm bottom.
Okay, so the how that doji candle is where it's got like a real small candle body and a wick to the upside. We got real volatile, and then like teasing a double bottom there, right, where it's damn near the same, right, with that other wick, and then it just blows straight through it. Is that what you're
Yep.
talking about?
Yep. So when I see little things like this in the chart, like perfect double bottoms, it's like that's not buying and selling pressure. That's bait that's going to get destroyed later. So that would give me confidence to target to get in a short in here with that little signature.
And that would be like a 10-minute trade.
That would be 9:30, and that would deliver by 10 a.m. So that's your 30 minutes.
30-minute trade. It's pretty good. It's pretty nice little time-based strategy there for you. Just like looking at retail patterns really
It's just
and
taking
openings.
retail's money.
Damn, dude. This has been very insightful, and I love it. I love it. I could think I need to. What can I do to say I'm not confident in putting my money into the market yet. What could I do to test out my strategies? Right, like you said something about paper waiting. What'd you say? What was it? Paper trading. Paper
So you
trading.
can go in here
Where can people paper
right
trade?
inside trading view.
Oh, in Trading View. Really?
Yeah, so you can just
So
have a
to
free
test.
trading view account, open up a paper trade, and you can test your strategies. Um,
Wow.
yeah, so that's kind of an intro to how I look at the markets. This comes from ICT concepts, the inner circle trader, and algorithmic price delivery. Um, I am going my I'm going to be opening up my Discord and my DMs on Twitter for anyone who wants more insight and more one-on-one based questions. You're welcome to DM me, and we can do one-on-ones. And yeah, I'm going to be opening up maybe only 10, 15 slots. Um, but if anyone is interested on one-on-one uh, insight into trading the markets like this, um, let me know. DM me on Twitter, and we can break it down. My recommendation would be to look at trading um, like a degree. Look at it like a 2-year to 4-year degree, and go in with the intention of not putting any money on the table for the first year and investing in your education before putting risk on the table. And get a
I love
mentor,
that.
get a strategy, get months of paper trading and confidence under your belt before you go and put money on the table. I mean, you wouldn't go and go to school for an associate's degree and expect to get a job and get paid 6 months while you're still taking classes, right? You you want to go in, get your education, and spend the time and money to know what you're doing before you go into the markets where the biggest money is in the world and they're trying to take your money. So
Yeah, that's smart. That's smart thinking. You use your paper trading account as your tuition, right? Don't go in there and bet the whole farm that you're going to be profitable, because then likely you'll lose the farm and your shirt and your shoes. So there you go, and very wise words. It takes time to learn these different things. And what I have done is popped up, if you can see up there in the top left corner of the stream, that is a QR code to the Darth Art Discord. So he's going to be opening up the Discord to, then mentor some, anybody that is interested in learning how to uh, just, if you can.
yeah, yeah, DM,
Okay, well, I'm doing
me on
this.
Twitter.
DM him on Twitter, and I also put this right here for you guys. Here's the QR code. Oh no, there or up there, and then here is the account to follow. So, love it. Did you want to take a little peek at the stacks chart? We are getting around that 90-minute mark, and I was wondering, myself, how are we doing? I know that it's not quite that time. You're saying that ETH needs to have its time first, and then also, all of the other if ands and aboves. Also, we have a question. Cryptiddy is asking, what are the profits, right? So on this 15-minute trade before, what would be the profits? It depends on a lot of different
I think
things,
he's asking
honestly.
about what are profits in
See, I
general.
read
He's
right
a fire
past that. GP does that a lot of the
fan.
time. Read right past it. What are profits? GP doesn't know, obviously. Let's take a look at SDX for a second, if we could get
Let's
there.
do that.
Because I would love you for that forever. Me love you long time.
Exactly. So let's break this down. So let's look at what we've got going down deep, deep, deep in the discount on the STX chart. So let's start back here in April, the beginning of the year. What do you see here? This is the same thing.
I
The
see.
swing high.
I see a cup and handle. Yeah, I see a cup and handle there too, like a retail pattern too. I do see that, and I do see a down close candle and an up close candle. I see all of it. Can you decipher it for me?
See?
I'm
There's your
retail.
there's your cup and handle. There's your bull flag.
Okay.
Everything. Right? All of the signatures, all the bullish chart patterns that you learn, they have a higher probability of playing when you're in a discount. So everything you see here, but this is a reversal signature.
I think there's one thing that we did not cover is what is the discount and what is the premium?
Discount is lower prices, premium is high prices.
And how do we identify them with the Fibonacci?
That's just above and below your midpoint. That's all.
Just below the 0.5 Fibonacci, above the 0.5
See
Fibonacci.
right there,
Thank you, good sir.
below your 0.5.
I do. I do. Thank you, good.
Good. So there's your bottom signal, and look what happened after that. We've ripped straight up for all these highs, and then we stopped just short of this one. So that's bait, right? Now, and then we did that, and then we came back down. We've got another higher low from here, from 48 cents to 52 cents. Higher low. So we've got this cup and handle, the even bigger cup and handle. See this cup,
Okay, I see it now. Yep.
right? This cup and handle, and now
Big old handle.
we're making another one. Cup.
So like a fractal.
It's almost like price is fractal. It does the same thing over and over again.
Huh. Curious. Very curious. Because I mean, as everybody knows, I'm retail, man. Like it's just simple as that. But I'm working my way out of being retail. I'm trying to be a shark.
Right, so these gross
Trying to be a
lines off the
shark.
screen and play premium and discount.
The gross lines, and the premium and the discounts. I got you.
So right here, 62 cents is my next point of interest for stacks, which we're going straight for. So I would,
Yep, looks like a daily close is imminent on the chart. Below our last swing low. So why is that your area? 62 cents.
right here, bull flag stop losses under this wick, and then we have this gap on the daily time frame. So I would really like to see 52 cents hold for stacks.
Got you. So 52 cents stacked holds, and we're doing just fine. Everything is dandy. So what bull flag are you talking about whenever running stops? So I know that you have the box drawn there, but I'm retail, remember? I like to see patterns. I can't see it unless I have lines on it. Oh, I see. That bull flag. So we're looking to stop out this bull flag by running the lows into the fair value gap, trying to, if we respect the midpoint, bullish, right?
Yep.
Beautiful. Beautiful, beautiful, beautiful. I love it.
And then, we've got this high, and then we've got this high. Very, very close, relative equal highs. That would be a near-term target. And then a higher target, but I won't be taking profits at these levels because I've got much higher targets for stacks.
All right, Bitcoin DeFi, NFTs, programmable Bitcoin, multi-chain, the bridge that bridges all chains back to Bitcoin, Bitcoin finality, fast transactions, cheap transaction fees, innovation, base builders, base community, right?
Exactly. Yep.
All that.
So that's what I'm looking for. Basically, on the macro, we're in a deep discount. So buy low, sell high. We're at the lows.
We're at the lows on stacks,
Exactly.
baby. Let's go.
Yep. And in this run up, this is where I the Giga NFT for 150x what I paid for it.
Beautiful, because that is compounding in price appreciation, the value paid for it whenever you minted the NFT, all of that in a bag of chips, right? So your NFTs, your SIP10 tokens, all of that are beta plays on STX, and then STX is the beta play on Bitcoin. So it's all leverage if you think about it.
Exactly. So, and we can definitely go sideways down here for a while into September, even into October. And that's fine. The longer we're down here at these prices, the more I'm going to be pressing the buy button. So if it goes sideways, we win. If it goes into a deeper discount, we can get cheaper prices. And if it goes up, I hope you're already positioned because then we win.
I love it. Get positioned, get yourself in the know. Thank you for looking at that and taking your most valuable asset, which is your time, to teach us all of these based concepts. Again, I'm truly taking a new approach at looking at the charts. I'm getting rid of these colors. All these colors are just distracting me, like you said, and just looking at fair value gaps, looking at where I would be putting my stop losses if I were trading the bull flags, um, all that, man. Retail patterns, real cool stuff until you get
Right.
wrecked, right?
This is what retail Rick is going to be looking at. This is why everyone's bearish. Everyone's
Oh
saying,
yeah, they see a bear flag. They see a bear flag. That makes perfect
yep.
sense.
So I'm just counter
So
trading
50
retail
cents,
Rick.
52 cents. Yeah. 52 cents, and then it's like, oh, we're right, and then more shorts induced, and then freaking like they're offsides. You're only on sides until you're offsides, right?
Mm-hmm. Yeah, and then just to do a sneak peek of the blue chips, where we're at for blue chips.
Yeah, you want to take a look at total three and tell people what total three is?
Well, check out Binance.
Okay,
See that? Isn't
that
that
works.
crazy?
It's loading. In a little second, it'll pull up the BNB chart. Oh, wow. Blue chips are starting to do their thing. That is cake in all of that ecosystem. BNB, baby. Wow. Doing some numbers. That is a blue chip there in the top 20. I don't know what market cap it has or where it lies within, the top 20 or top 10 or top 5. But I do know one thing is damn, that looks like it
It's
ripped.
number 5, 116 billion market cap. That's where BNB is at. So we're seeing blue chips start to go, and alt season is pretty imminent. But yeah, that's
We're going to have some
that's
fun.
it. Gist of it.
We're going to have some fun. So even if we have a little bit of time where we're gonna have to spend some time packing some bags and like it just gives us a little bit more time to accumulate and I'm hyper bullish on it all, man. I feel like our ecosystem is growing in ways that we cannot perceive, and really excited um to see that that for a long time on the timeline there a lot of people were calling for like, hey, this cycle is going to be completely different than any other cycle. But all signs point towards it being a traditional market cycle. So we shall see, right? And for the bears out there, uh, be prepared, man. Be prepared. The bulls are coming. They are not asleep. Retail is going to get wrecked as it always does. And if you're a disbeliever, then good luck to you. Don't get off sides, man. Be careful. Not financial advice. Do your own research as always. Um, Darth, what are we looking at here now?
This
Looking
is
at
the
total three.
total market cap of all the altcoins except for Bitcoin and Ethereum. So this is your alt season.
Okay, so this is you looking at the charts like, hey, I need to touch this curvy line, this para is this what they call parabolic?
Yeah, we're about to go uh, into into euphoria.
Okay, so euphoria means people are spending money they don't have on things that they don't need. Um, so pack your bags now before it's too late, is what I'm saying. So love it, dude. This is super fun, and it was a cool little warm up in the the beginning, and now we know what to expect too. So I can't wait to see what we have for episode 2 of Darth Charts. Um, did you have any last pointers that you wanted to touch on before we call this one finito?
Yeah, so DMs are open on Twitter if you want. If anyone in the audience has specific questions they want to ask and get a one-on-one, uh, send me a message. And yeah, next week hopefully we'll have like a little super chat feature, so you can send like a couple STX and say, "Hey, can you look at this ticker or this ticker?" And we can start doing charts for the community.
Right on, man. We're gonna get everybody packing their bags and get them in the know, and then rotating profits, right? And then we all win together. So be sure to tune in to the next episode of Darth Charts. That is next Tuesday at 1 p.m. ET. Do a 90-minute segment where we're breaking down all of the based TA habits and getting into the know. So go leave some super chats. Go to DeOrganized.media. Check out this, based episode. Go rewatch any of your favorite episodes that you've watched from DeOrganized, the Let's Go Morning Show, DeOrganized Nightly, and all of that. So, yeah, man. Darth, thank you again for having a based look at all of the things that are TA related. Coming, seeing things in a rational way and an easy way to for people to learn, breaking it down all the way to the basics. Sometimes we have to take it there to start to build ourselves up from square one. You don't want to jump into this and say, hey, I watched Dark Dude episode 1, I know trading now, and then go YOLO your bag into Oblivion or Narnia. So uh, go get yourself a paper trading account and experiment with your theory. If your thesis is correct and you finally become profitable on your paper trading account, then execute just a little bit of money. You don't have to put the whole farm, like I said, and see if it works for you. Different strokes for different
Yeah,
folks,
get a
man.
mentor. That's the best way to do it. And don't forget, Thursdays at 1 p.m. EST, we're doing BNS Space. So any and all are welcome there. We're doing some giveaways. Probably going to give away Big Wig Energy.id. It's gonna be fun. And yeah, we'll talk about BNS meta plays um, to kind of get a little leverage position on stacks.
Let's go. I'll be there Thursday. And what time was that again?
Thursday at 1 p.m. EST. So we've got Tuesday, Thursdays. We'll be live at 1.
Tuesdays and Thursdays, 1 p.m. Let's go. Right on, Darth. Well, I shall see you on the next one.
Thank you, sir.
Have a good one. And this has been an awesome episode of Darth Charts where we get into everything TA related with Darth Dude. Be sure to give Darth Dude 73 a follow on X along with the DeOrganized handle at DeOrganized BTC. Jump into the DeOrganized Discord with this QR code right here. Get into the Darth Arch charts right there, right, right, right here, right there, right there. And I'm your boy GP, and I will see you on the next one. You guys have a blessed rest of your day. Stay tuned. Peace.